Hi everyone, this is Mrs. V. Chen. Welcome to my Form 4 Accounting Lesson 8. And today is 13th March 2020. Today's topic is accruals and prepayments. Alright, so before we look at that, let's look at the background. So we have this income statements. So do you remember what do we start with in the income statements? We always start with sales. But however, there are two kinds of sales. So after selling goods, we will have money received from customer right away. So we call that cash sales, right? But sometimes we receive money later from customer, so that we call that credit sales. Okay, so therefore you can see this is example for income statement, which is accrual based instead of cash based. So accrual based instead of cash based, just like this. Even though we don't have money received yet from customer, we still realize this credit sales as part of the sales in the income statement. Okay, so remember what is the definition for accrual concept? So it means what? We realized income earned but not cash received. Okay, just like credit sales. And also we recognized expenses incurred but not cash paid. Remember this accrual concept? So the keyword is income earned and expenses incurred, right? Accrual concepts. Okay, next I have two cases for you. Let's look at case one, for example. So if we pay rent 150,000 by check for 15 months, all right, so pay this by check, therefore we have less money in our bank accounts, so we credit bank and the amount paid is 150,000, is that right? And this is for 15 months, is that right? And what do you think about rent here? The rent must be expenses in the profit and loss account, so that when we put this in the profit and loss account as expenses, for the rent expenses, it must be the rent incurred for how long? For 1 year, which is 12 months, because we follow accrual based, is that right? Not cash based. So the profit and loss must be the rent incurred instead of rent paid here, right? So that would be 120,000, is that right? So now next you compare debit side and credit side. Which side is smaller? So here this is smaller, and then I have to insert 30,000. All right, on debit side. Okay, and this is a new treatment for us in this chapter. We call that prepaid rent. Okay, so here we have the new thing. We call that prepaid rent, which is a debit item. Okay, must be current assets. Okay, so if you go to your textbook on page 99, you have this new term, prepaid expenses must be a debit item because it is a kind of current assets. So why so? Because you look at the meaning. For prepaid expenses, it means that expenses that have been paid, right? For example, here we pay 15 months, which is too much, okay? We only need 12 months in a year, right? An accounting period, but have not yet been incurred in the end of that period. Okay, so that means these 3 months we're paying too much, we'll carry forward, okay, as current assets in this accounting period. All right, so what is meaning of this incurred? That means not yet consumed, same as not yet consumed, same as not yet used up. Okay, so this is the new thing today. We have prepaid expenses, which is a debit item and which is a kind of current assets, and here is the meaning of current assets if you go to page 99. Okay, now we come to case 2. Now this time we pay rent 80,000 only by check. So that is for 8 months. So therefore, how much we credit bank? So why we credit bank? Because we have less money in the bank, so that I credit 80,000. All right, and look at this rents in the income statement. Expenses always a debit item, so I put in the profit and loss account always the rent incurred. And what is incurred? How long should be the rent incurred? It should be 12 months. So therefore I have in the income statement as 120,000. It doesn't matter how much we have paid. Okay, now this is debit side, this is credit side. This time which side is smaller? This side is smaller. Okay, I need to insert 40,000 and saying that you can see the expenses we pay is not enough to cover this. So therefore we have this accrued rent. Okay, so what is accrued rent this time? Which is a credit item saying that the expenses we pay is not enough. Okay, all right, so and the definition for accrued expenses, if you refer to page 94, and also what is accrued expenses is a credit item, all right, and which is current liability, meaning expenses that have been incurred. So we have consumed this, we have used up this during an accounting period, however, have not been paid by the end of that period. And then we have not yet paid for these expenses. So what is accrued expenses? Current liability, and it is also a credit item. All right. Okay, so and here is the example I'm going to show you. So what will be the effects for prepayment and accrual affecting the statement of financial position? Okay, so let's see what we have to do here. We need to draw up an income statement and also statement of financial position. Okay, and here is my income statement. All right, so you always start with a very nice heading, and which is for the year ended 31st December. Okay, so remember the description. We always start with sales and then minus returns inwards, and then we have cost of goods sold. All right, same as before. And now I have already put some key answers here for you to follow. And after gross profits, we add revenue to gross profits, and then we minus expenses from gross profits. Okay, and here this figure is total expenses, and therefore we will have net profit equals to this. Okay, and at the same time, this is statement of financial position. Always remember we start with a nice heading, and this is about as at 31st December. Okay, here current, non-current assets, and then we have current assets. We always start with inventory, which is the closing inventory, and then we have accounts receivable, and some key answers here: total non-current assets, total current assets. Oh, okay, use calculator later to get total assets. Okay, the second half, financed by capital as usual, at net profits. Oh, just now I have net profit right from here. I already have the key answer, so which is 127. So I can put 127,820 here from the income statements, and I have my current liabilities and non-current liabilities. Okay. Okay, next I'm going to do this question starting from additional information and do it step by step, because this additional information actually affects the numbers and figures in the trial balance. All right, so look at inventory here. What is inventory? Look at the dates. So obviously this is the closing inventory. So since I already have my place for closing inventory, so where's my inventory? Here, closing inventory, so which is 364,200. Okay, and what is closing inventory? Means not yet sold to the customer, so it would be part of our current assets. So I have my current assets here and inventory with the same amounts, which is 364,200. Okay, so this is point number 1. Okay, next point number 2, you can highlight this as well. Expenses owed, sundry expenses. So that means if you move up here, So you have this 8,070. So that means what? That means this is expenses paid. Okay, and here expenses owed, that means we don't pay enough. All right. Okay, so what would be the adjustments? And this expenses in the income statement. So this is my income statement, expenses. Now I have sundry expenses, right? Okay, all right. So when I refer to this sundry expenses in the trial balance, 8,070. So which is the expenses paid. However, we don't pay enough, so we have to add 1,620. So why we add this? Because we don't pay enough, and income statements is accrual based. Is that right? So 8,070 plus 1,620. So that I have 9,690. Okay, so what about this 1,620? When we don't pay enough, we owe. Okay, we owe people this much. So what is this? This will be current liability. So that I go to my statement of financial position. So I put 1,620. Okay, so this is accrued sundry expenses like that. Okay, next. Not only sundry expenses, we don't pay enough, we also have motor expenses, 3,300. So you refer back to trial balance. So this much is not enough. Okay, so that I need to do adjustments. So therefore I go to here, expenses, which is motor expenses, right? So to start with, this amount pay 49,170, paying not enough, so we owe another 3,300. Okay, so the amount will be 49,170 plus 3,300. So this is 52,470. So this one means what? This one means expenses incurred, and 49 means expenses paid. So that, which is not enough, so that we owe people this 3,300 as current liability. So my current liability is 3,300, and which is accrued motor expenses. Okay, next we have prepayments here, rates. We pay rates to governments. Okay, so if we have prepayment, it means that this time we pay too much. And how much we have paid? Here, if you go back to trial balance, you have this rates and insurance. The firm pays 28,960, so prepaid. That means paying too much. Therefore, I need to make my adjustment in income statement. So this is my income statement. Then that is rates and insurance. Okay, how much pay? Which is 28,960. Since paying too much, so that will be minus 3,320. So the rates and insurance incurred minus 3,320 will be 25,640. So this is the expenses incurred, and this is expenses paid, and since we pay too much, so therefore this 3,320 will be current assets here. So I have prepaid rates, which is 3,320. Okay, next, point number 4, which is a new thing, so you can give me a highlight to that. Okay, now we have the business let part of the premises. Okay, let's check premises. Do we have premises here? Yes, we have premises here. Okay, so what is premises? Premises is a kind of non-current assets, is that right? Now, can I put premises here as non-current assets at this moment? Premises, okay, so which is 400,000 Okay, so what is the purpose for this premises? Take a look at this. To a tenant who owed 25,000 as this. Okay, so we let part of the premises. So we don't use the premises. However, we let tenant to use it. So therefore, what do you think about the amount here will be a kind of revenue to us? Okay, so here is the double entry to analyze the situation step by step. Okay, so what is revenue? Revenue, always a credit item. So this is profit and loss account. Okay, revenue. And then we are going to earn this rent income or rental income. Okay, let me put that in this way. Rental income. Okay, so if we earn rents, therefore we need to receive money. Is that right? But however, do we have money received? You look at the word owed. So we don't have money received yet. So therefore, we are going to receive money later. So we debit rents receivable by 25,000 and 25,000. So this is a double entry related to point number 4. Okay, so actually, if you check the trial balance, you don't see any rent receivable, right? You don't see any rental income. So let me use rental income, which is better, right? Okay, now if you check this trial balance, you don't see any rent receivable. You don't see any rental income. So therefore, this double entry has not yet been done in the books. So we have to add this double entry step by step. Okay, now next, this is a new thing. What do you think? This rent receivable will be what? It's a good thing. It will be a kind of current assets because we are going to receive money later. Okay, similar to like accounts receivable, like trade receivable. Okay, now I'm going to enter this transaction. Credit profit and loss means revenue. Okay, therefore this 25,000 here, gross profits. I have my revenue. What revenue? Which is rental income. Okay, and which is related to point number 4. And how much? 25,000 according to the question. Is that right? So if we earn income, we have to pay money. However, we don't pay money yet. Sorry. If we earn income, we have to receive money, right? So since we don't receive money yet, so this 25,000 will be current assets here. So I have rents receivable, which is 25,000. So you can see we have to go through each point step by step, and then we use double entry to do that. Okay, point 5, you can also highlight point 5. And now we have loan interest was owed to P Ho. Okay, are we P Ho or not? We are not. We are L10. The owner is L10. So what do you think about this interest? This interest, we should pay this interest or earn this interest. Okay, so how do you know that? Therefore, you refer to this item. We have loan from P Ho. Okay, so what is loan from P Ho? And look at this position, which is on credit side. So very obvious, it must be liability. Is that right? So this must be liability. And look at the dates. Starting from 2015 to this 2018, which is longer than 3 years. So that will be a kind of non-current liability. Okay, so therefore I go to my statement of financial position. I already have the place for non-current liabilities, which is loan from P Ho, and the amount is 400,000. Is that right? Okay, so therefore what do you think? Loan from means what? Means we borrow money. We have liability. Therefore, whenever we borrow money, we must pay this interest. However, paid or not yet, look at the word owed. Okay, so what is the adjustment? Here, loan interest owed. Okay, so loan interest since we borrow money, it will be a kind of expenses. So therefore, it should be on the debit side of profit and loss. Now we have loan, interests, right? So if we have expenses, but however, look at the word order, we have not yet paid. Therefore, it would be like another accrued loan interests. What is it? This is a kind of current liability. And how much is it? The interest is 40,000 according to point number 5. Okay, now I do posting. So I will have, where's my income statement? So this is my income statement. So I will have this expenses. I will have loan, interest, which is 40,000. Whenever we have expenses, we have to pay. However, older means not yet paid. So this loan interest will be current liability. I have accrued loan interest, and which is 40,000. Okay. Okay, so therefore you can see we have finished all the adjustments related to additional information, and for the remaining thing, you just analyze and do classification. For example, we have discounts, 2 discounts. This one on debit side, remember what is that? Which is discount allowed, right? And what about the discount on credit side? Which is which is discount received. All right. So which one is revenue? The one on credit side is revenue. So therefore, I add this gross profit. I have discount received, which is 5,060. Okay. And what about this one? The one on debit side is discount allowed. So one of the expenses. So 4,100. Right? So, and then just for the remaining thing, okay, I do, okay, this for you as well. So this is carriage inwards. So what is carriage inwards? We add carriage inwards, carriage inwards. Oh, carriage inwards. So my description here is wrong. It should be, oh, I have a wrong thing here. So it should not be carriage outwards here. So it should be, I have a careless mistake. It should be carriage inwards add to purchases. And what about carriage outwards? Carriage outwards should be here, right? So you see, I have careless mistake just now. All right, so it doesn't matter. Okay, carriage inwards add to purchases in the trading account. So I have this 3,090, right? And next I have carriage outwards, no account of normal expenses. So 2,180. Okay, now I come to returns. So you have returns on credit side, returns on debit side. So what do you think about the returns on debit side? The return on debit side will be opposite to sales, which is returns inward. So I have my returns inwards here. So 13,840. And what about these returns? The returns will be opposite to purchases. So one credit side will be returns outward. So 8,100. Okay, so again, so purchases. So this is purchases, 842,900, right? This is my sales, and 200. Okay, so if you use your calculator, you will get the sales minus returns inward, and this is already key answer. Okay, so therefore you can do this, okay, and do identification and post it to the places accordingly. Okay, all right, so here is my key answer for gross profit and then net profit, total expenses. So I have not yet finished the question, so can you finish that for me? Okay, and here is total non-current assets, total current assets, and then you just get all this from the trial balance and see whether you can make this two. Okay, here total the same. okay, or not. All right. Okay, so thank you for watching my video. I'll see you next time. Bye bye.